Howdy, welcome back to Dion Talk. In today's video, I'm actually going to ask somebody who has a little bit more experience on the subject than I do. I've got Michael Zuber, author of One Rental at a Time, and Mike was investing before the '08 crash that impacted real estate into stocks. And so I have my own reasons, but I'm actually curious, Mike, why is it that you prefer real estate to stocks? Is that actually true? Are you 100% in one or the other, or do you diversify?
I am 99% real estate, a little bit of cash, a little bit of commodities, a little bit of crypto, no stocks. So my story is kind of similar to a lot of people in crypto the last week or so. So I successfully turned a little bit of money into a lot of money, stayed too long, and the lot of money became a little bit of money. What I found with stocks is if you're an investor and you can do the work and you can stay on top of it, you could do okay. But unfortunately, as human beings, we get caught up in the mania. We get caught up in the hype, fear of missing out, FOMO, beginner's luck, leverage. And it's too easy to go from investor to speculator or gambler. And that's why it's just one of the many reasons why I chose real estate, right? It doesn't operate as fast, right? I happen to choose two companies that were frauds, Enron and WorldCom back to back in the 2000s. And you can't really tell, right? They were public companies. They were audited. They were just crooks. The mania was hype, was real with stocks, but people were losing money, right? The companies weren't making a profit. So I'm just all real estate. You can see it. You could touch it. You actually have lots of protection with real estate, right? Who's going to tell you if you're overpaying for a stock? No one. Who's going to tell you with real estate? An appraiser, a bank, your lender. There's lots of things. Real estate doesn't move as fast. It's harder to get in, harder to get out. And there's lots of things that make real estate it's not as just hyperactive. You don't have to watch it all the time, right? So I know lots of people are in crypto or stocks and they can't sleep at night because it's the wild gyrations. And I don't need that headache. So definitely 99% real estate.
I swear I'm not a stalker, but I'm familiar with your story a little bit. And correct me if I get these numbers even close to right or wrong. You started with around $7,000 investing in stocks. You turned it into about $196,000.
Correct.
I kind of can follow that. It was around the .com craze when things were just, they can only go up. Mm-hmm. I don't know that I understand what happened when 196 became 40.
Yeah. So a couple of things happened. It was a series of bad events. So the first one is once you get cocky, right? Once you can turn $7,000 into 196, you think you could do no wrong. So what happens is you go on margin or you add leverage because, hey, if I had done twice as much or three times as much, I could have been a millionaire, right? So I added leverage. So any goodness would have been hype or more, and any badness would have been dropped significantly. So at the time I was playing with a high-tech company that's a lot like Tesla today. It was called Cisco Systems. It just always went up. It split every year. It was just something to play with. And then it went into, a decade of flat. But it turned while I was owning it. So any drop really accentuated the drop because I was on leverage, right? I was on margin. And then I made a series of errors, right? So I think it went from 196 to like 135 or 140 because of some bad bets. And then I'm like, okay, I'm going to cool out. I'm going to chill out. I'm going to move everything into a safer area. So for me, safer areas at the time were utilities, right? And at the time, the hottest utility, it was out of Texas. It was called Enron. They were supposedly the best and brightest. They had more PhDs working at Enron than anywhere else. Just all these crazy things. And I'm like, I'm just going to park it there while I figure out what happened. And lo and behold, like a month later, Enron's a fraud. So now 140 becomes, I don't know, 60 or 65 or something. I get just a massive haircut overnight. Get it out of that. And still the same thing, right? Because I'm still 30 years old and I think you have to be invested. You have to be invested. You can't be in cash. You're too young. You got to take risks. So I go, okay, well, utilities didn't really work out. Let me go to phones, right? AT&T, Verizon, and oh, by the way, a company called WorldCom. WorldCom, all these phone companies are about the same, but WorldCom offers just a little bit more. They're growing by acquisition. all of these things. And lo and behold, I move everything into WorldCom. And Bernie Ebbers, who I think is the CEO at the time, turns out to be a complete fraud. And I get hit again. And by the time I get out of that investment, I'm left with about 40K in cash. I feel like it's just I wish it was a death by a thousand cuts. It was 3 bad decisions in a row. Yeah, these were audited companies. They've been audited for years. Arthur Andersen, PwC, whoever they were auditing their books. They were traded. Analysts were giving them high praise, and they were just full on frauds. So not cool.
So you have an MBA in finance.
I do.
And I think you're a very smart person. And you did the research with stocks because of some unethical people and some things that were outside of your control. You pretty much, you dropped to 40,000, so you didn't lose all of it, but in my mind, you pretty much lost it all.
Yeah, me too.
And there are people
That's what I think too.
There are people now who go, well, crypto can only go up, and the to the moon memes come out. And you said something really smart where you said, I'm 99% in the asset that I understand, and I know I have a confidence in my ability to get a return. And I have 1%.
I call it insurance policy. Robinhood tries to gamify investing. I don't think investing should be a game. I think it's serious business. Games are meant to be fun, winners, losers, lessons learned, all of that. But investing is about your financial future. I don't think investing is a game. So I have an insurance policy that I call crypto, that I call silver. Like I have, a pile of silver. This is a 1 kilo silver coin. I have some of these, but yeah, I have insurance policies because you just don't know.
And so I'm in the Seattle Investors Club.
Okay.
And every Thursday we have a mastermind group. Yesterday I posed the question, why stocks versus real estate, why real estate versus stocks, just to see what the answers were. And there are some pretty smart people in that group. And a lot of people talked about diversifying and having, 20% or 40% in each one. And then there was only one person who basically, without me saying it, said exactly what I would have said. I'm 100% in real estate. At some point, your portfolio gets big enough to where diversifying makes sense to have that insurance policy. Diversifying for growth seems to be the thing that slows people down a lot. Just my personal outlook on stocks, because I've never done it, is that it doesn't have the benefits that I see in real estate and can easily understand. I can get immediate cash flow that I can spend, save, or invest. And I have a confidence in my ability to get that return because I've done it so many times in a row. Appreciation on 4 times what I've spent. Tenants are paying off the loans. Tax benefits. Versions of that exist in stocks, but not something that I understand. I'm not saying that people who invest in stocks are wrong. I'm saying that for me, real estate made more sense because my mind understands it. There are people who understand stocks better, and that's the way that they should invest. Maybe they don't want to manage properties or deal with a property manager. But I think focusing on one asset class in the beginning is the way to grow, to get large enough to then diversify for protection.
Yeah, I couldn't agree more. You've got to be single thread in the beginning, right? If you're doing the work and you're living below your means and you're able to squirrel $10,000 or whatever it is away, if you're going to take that $10,000 and divide it in a third, a third to stocks, a third to crypto, a third to real estate, you're not going to have size enough where when your winnings win. But most importantly, you're not, I don't care who you are, you're not going to have enough time to do the research across all those aspects. I fundamentally believe, and we can use crypto as an example. I mean, the fact that 11-year-olds are coming out and begging their parents for Dogecoin is not a good thing, right? The fact that the media has brought it all the way down to 11-year-olds asking for this BS coin that has 5 billion more of them created every year, no supply, no development team, no use case, is borderline criminal and certainly a pump and dump. That said, there are some crypto that will be around for the long term because they have use cases. They have a team. So you've got to do your research. There are too many pump and dumps going on. And the same thing in real estate. You got to do your homework. You have to do your homework. And that's why I realized I only had 20 minutes a day. So I just let stocks go. I was like, nope, I'll come back to you maybe someday in the future. I'm going to go learn this, because the beauty about real estate that isn't in stocks, isn't in crypto, is you can create an unfair advantage. What I mean by that is if you learn a market well enough, 3-bedroom, 2-bath homes in a certain area, you can become that person that knows a good deal before anybody else. You could create value. You can take a 1,400 square foot and add a bedroom by adding a wall and a closet, right? You can do these things that add value that others don't see. That doesn't exist with stocks or crypto that has a price every second of every day, right? Real estate is far less efficient, which allows you to have outsized immediate returns. I can't tell you how many times I've negotiated a deal where the day I signed it, I walked out with $100, $200, $300,000 because I got it undervalued. You can't do that in stocks. You can't buy Tesla today as we're recording at 300. You got to pay 580 or whatever it is. In real estate, it happens every day. People sell stuff every day for significantly less because they don't understand the value.
One of the problems with crypto and stocks is the Dunning-Kruger effect, where we don't know what we don't know. So people hear things like crypto can only go up. Tesla's going to start allowing purchases to be done when crypto, so crypto goes up. People with retirement accounts cash them out to buy crypto. Investors with real estate sell them all to buy crypto. And then a policy change happens at the top of a company, and all of a sudden last week crypto drops 30% or more now. That doesn't happen in real estate for buy and hold investors. I think for flippers, you can get caught in bad timing. But for the strategy of one rental at a time, that doesn't really seem to be the problem, especially when people are building their wealth.
Yeah, if you're doing one rental at a time, even if you bought at the peak, but it was cash flowing, the beauty is you have 30-year debt and don't have to sell. And oh, by the way, the interest rates are cut in half. So if it cash flowed at 6%, it's certainly going to cash flow at 3%. Yeah, you're not going to get caught short. If you're anytime where you bring a time horizon like a flipper does, like I'm going to be in and out of between 6 and 9 months, timing can bite you. But if your time frame is forever, that's a lot of inflation, right? You're going to be okay.
The long enough time horizon, it goes up, consistently.
Yep. Some people have short-term debt in like apartment buildings. You're going to see some apartment buildings come up in the next 3 to 5 years because the debt structure is wrong. But you don't have that with residential and house hacking. It's a residential fixed rate 30-year loan.
It's one of my strongest points in my video of single family versus multifamily is, and people who invest in multifamily don't like it when I say this, but I don't like the idea of a loan reevaluation period.
Absolutely.
In 5, 7, or 10 years, who knows what's going to be happening in the market? There could be a pandemic that year, you don't get enough leases renewed, and they call in your loan. That doesn't happen, like you said, in long-term buy and hold investing. But now that I'm hearing all this crypto talk, I think I am going to sell all of my properties and just invest all in crypto.
No, don't do it.
But not today. All right. Well, thanks for clearing that up for me, Mike. I appreciate that. Until my next video, thanks for coming to my Dion talk.
We're sorry, the number you have dialed is not in service at this time.
No, don't do it.